Hey everyone, sorry about that. I lost a camera. We are back up, so we are good. Welcome back to another Stock Market Open live stream, and we are now. Oh boy. Well, let's get to talking about what we need to talk about. If you haven't seen Pan W yet, holy smokes, talk about what happens when you give some bad guidance on cybersecurity outlook. Pan W, folks, here we go. Palo Alto Networks down 24% in the pre-market thanks to some bad guide. But what's remarkable is, AI, one of the thoughts with AI was that AI would lead to some more spend for cybersecurity because maybe cybersecurity companies had better tools for using AI to detect cybercrime, and the investment into cybersecurity would be one that would prove fruitful and beneficial as a result of, well, artificial intelligence creating potentially more cybersecurity threats and therefore needing cybersecurity defenses. Well, apparently not. This darn thing. There we go. So the Palo Alto Networks numbers came in with a forecast Q3 revenue of a miss of actually not that bad. Goodness gracious. Let me see exactly what the detail was here. We know it was just on Outlook that the market sort of freaked. But let's take a look here. We have fiscal year revenue of 7.975. That was the forecast, and they saw 8.175. So they only missed guide by 2.7%. A 2.7% miss on guide, and the darn thing is down 24%. That's scary. Especially with this idea here of what do we have here? Customers are facing. Ooh, it's the phraseology. Ooh, that's no bueno. Customers are facing spending fatigue. Ouch. Okay. All right. There we go. So yeah, Palo Alto Networks giving a little bit of maybe a more dreary, maybe not dreary, it might not be the right word, but sort of dour, sour, sad outlook. And obviously that is making investors a little bit sad in the company. And investors might be a little sensitive when it comes to artificial intelligence, specifically today, because, well, everybody's waiting for NVIDIA to report, and I think we're going to see the definition of concentration risk play out with drama today. We'll see exactly how that ends up going. But I think today's going to be a roller coaster, mostly because I think there's so much of an expectation that NVIDIA can't possibly beat that everybody's almost bearish on it. But then you wonder if everybody's bearish, is that actually a good thing and contrarianly bullish for the stock? It's a little bizarre. I haven't quite figured that one out yet, but we'll see. So Palo Alto Networks, let's finish writing that down. So here we have about a 2.7% miss on fiscal year guide, but that wasn't the big issue. The bigger issue was more that they're saying customers are facing spending fatigue. That was your oopsies here. And then suggesting, which is a way of trying to soften, they're saying demand is no different from prior quarters. But the problem with saying demand is no different than prior quarters, it means you just robbed growth. So basically no growth, right? And that hurts. CrowdStrike, Zscaler, Fortinet, Follow, Palo Alto Networks slower. Yeah, let's see how some of these others are doing here. This darn thing. Hold on a second here. I don't understand what it is with the Bluetooth. It's just so annoying with these little headphones. They always disconnect. So I don't know. Maybe I just have to like repair it or something. I don't know. But it's the second different set of headphones I've used. But I always have a backup. And backup is always the one that just doesn't fail. It's imagine this: a wire with a 3.5 millimeter plug. I love that because You gotta have that reliability somewhere. Bluetooth, on the other hand, I don't know. Drives me nuts. But that's all right. So, okay. So that's Palo Alto Networks. I want to see how some of the others are moving. So we've got CrowdStrike. CrowdStrike, wow. CrowdStrike down 10% on that news. Yikes. And so then we probably got a move in Cloudflare as well. Cloudflare only down 3%. Now, it hadn't had the run that CrowdStrike had. How about Zscaler? Zscaler, yeah, down 9% as well. Those are some big moves there. You know, another one that had a pretty big whack-a-dudes yesterday was S-Edge. Boy, the margin at SolarEdge makes me worried that they're going to go bankrupt. Now, I'm not exposed to S-Edge. They're obviously going to move Enphase, though. See, Enphase pre-market down 388. But 388 is nothing compared to the 19% this stock is down. And what's sad about this here is you are... yeah, you're basically right back at the line, which is crazy. Okay, 19% only brings us down to that line. Wow, that just really shows you how much this thing has moved down, SolarEdge. But, so SolarEdge comes in, this was wild. Okay, so let's write this down. SolarEdge had, the fourth quarter revenue guide wasn't that far off. Q4 revenue was 316 mil versus the 323 expected. Okay, that's not horrible. That's not the biggest deal right there. But what you have is the Q1 guide that's horrible. So first quarter guide, you had a midpoint of 200 mil versus 373.2 mil expected, which 200 divided by 373.2, that's a drop of about 46.4%. Wow. It's just incredible. But the more scary thing for a company like SolarEdge is that their margin for Q1 might be negative. Adjusted gross may be negative Q1. So let's take a peek and see what that looks like. So if I go, let's see here, investor relations, S-Edge. And now we can do this pretty quickly. So let's just get into quarterlies here, whatever. Give me your cookies. And let's go for, doesn't look like I'm going to actually get the 10Q yet, but that's fine. If I could just get financial statements. I want to just see, probably at the bottom of all this crap. Here we go. Okay. So what I really want to see is margin. Oh my gosh. I hate these. I really hate these slide decks. They're so trash. Like, just give me the financials, please, goodness gracious. Okay. Shipped. Balance sheet. I guess I could use this. GAAP P&L. Here we go. Okay, here. So, GAAP P&L, Q3. Okay, here we go. Q4. There we go. Oh my gosh. Look at that. They're losing. Oh my gosh. They're losing money. Cost of revenues. Wait, sorry. Revenues, $316 million. Cost of revenues, 372. Holy smokes. They had gross margin. Gross margin was negative 17.9% in Q4. So they lost money. Lost money on sales. And their OPEX, so they had gross profit of negative, gross profit was negative 56,425 versus the OPEX, which is 181,156. Ouch. Oopsies. So let's compare that, okay? Just for giggles here. Enphase Investor Relations. I understand Enphase. Yeah, they're trying to clear their inventory channel, I know. Everybody's been trying to do that. You're not wrong. Gosh, get this trash out of here. I hate this coupon crap. I never use this. Hold on. I'm literally gonna uninstall this trash right now because it just drives me so nuts. PayPal Honey, remove. I should report abuse. Okay, I'm not gonna do that. Just go away. Just in the way. There. Sorry you had to experience that. Ah, so much better. All right. So, okay, here we go. So the financial results for Enphase, I just want you to see the contrast here. And even though Enphase gets, pulled in the mud because of the rest of the industry, let's just look at the contrast here for a second. Well, it's okay. First of all, I want you to see gross profit because they have OpEx as well, and that gets them negative too. But look at the gross profit. So remember the other one, gross profit was negative 17.9%, right? Enphase, you have gross profit. What's the gross profit here? 146,662 divided by 302,570, 48.47. So gross margin was 48.47% positive in Q4. Gross profit was 146,662 versus the OpEx of basically the same. Yeah, 156. OpEx 156,893. So that's a loss of 10K. Then they go positive with interest income. So you're definitely hurting, right? But look at the difference in the margin of these companies. The gross margin alone. I mean, we know solar's getting whacked. We got that loud and clear. But the difference between the margin of the companies on gross, what happened? You went from 27, 25, 26, 29, 31, 32, 19% margin to negative 17. And then here, you're at a gross profit margin of a number that's actually getting larger. See, 48.4, 289 divided by 551 is 47.5. So their margin actually increased, their gross profit actually increased on less revenue. So I find that so fascinating about Enphase. They really have strong pricing on their product. The problem is you just have less demand for the entire sector in solar because of interest rates. So very, very, very interest rate sensitive sectors. And I mean, obviously, if we look at what's been happening here now with interest rates, it's still up. Let's see here. Bonds this morning are at 4.264. So really, both of the interest rate sensitives are whacked. So one just, I think, probably has a lot more pain than the other because the negative loss there, I mean, I wonder what the free cash flow is of these two. Let's compare that for a moment. So if I go to slides, let's see if we can get cash flow. Yeah, here we go. Net cash provided by operating activities. So let's see. Free cash flow was, well, actually, I could just tell cash flow because they don't break out their plant property and equipment expenses. So I'll just go 139. 910 million. That's for SolarEdge. And then if I go to Enphase, oh, financial results. Let's go back there. Cash flow, cash flow, cash flow. Cash flow. Where are you? There we go. Cash flow, cash flow, cash flow. Net cash provided from operating activities, 35. That's not free cash flow, but it is cash flow. So you're still positive here. Now, that's actually very interesting because it actually means, frankly, and I'm just going to say this is my opinion, you kind of know how, like, Tesla is pushing everybody out of the EV space. I think Enphase is doing that in solar. So I think Enphase and Tesla are pushing their competition essentially out of the way because of their ability to control gross margin in a way that nobody else can. That's just an idea. I could be wrong about that, but I'm gonna. How do I? How do you reconcile that? I mean, basically, it just shows you, like, much like Tesla in EVs, Enphase is the winner of the losers. That's the line. It's the winner of the losers. So congratulations, you're the best. You have the strongest PP out of anybody in your industry. You're just still a bunch of losers. That's terrible. But I think that's a very big difference. See that's something that folks I think miss, is that you can have, I'm just going to be straight here, you can have a shitty industry that's going through a really bad cycle. That doesn't mean there's still not a winner within it. And so I believe Enphase and Tesla are, but they are, it is impossible for them to broadly win until interest rates come down. And so obviously the longer it takes for Jay Powell to, get off his high rate horse, the longer that takes. That's just okay. I think anybody investing in those is well aware of that. But it's also very interesting because you're getting to this place now where you're getting into losses now. And it's going to lead to bankruptcies in the solar sector. And so I find that very interesting. Okay, so let me see here. I'm trying to fix this because now, hold on, give me 1 second here. Turn that off and on again. What is this crap? Oh, okay. That's what happens when you have flash floods in California. Don't have flash floods. Stupid. Flash floods in California, and they turn your cable boxes off because they do those stupid, what are those, I don't know what it is, the warning, whatever. Oh my gosh. So annoying. You turned all my crap off. Anyway. Like, I turned off it's probably bad, but I turned off those alerts on my phone that wake you up in the middle of the night. The national alerts or whatever. I'm like, Lauren, you could have yours on. Anyway. And so she's like, I don't know, I'm going to keep mine on. I'm going to turn it off. I'm like, that's okay. But, okay, anyway. So, next. Okay. Let's see. I want to start, get into what some of the suits are saying here. But that was interesting on the Enphase Tesla issue. Liquidity concern, dogging the Fed, may offer treasuries a solve. Oh, I haven't heard that kind of word before. It's like straight out of World of Warcraft. Investors must be ready for the possibility that the Fed could slow or halt the unwinding of its balance sheet before it reduces interest rates. Should systemic liquidity worsen and inflation continues to prove sticky? Balance sheets at the overnight repo facility have slumped almost 50% so far this year to around $531 billion, putting them near the lowest level since 2021. That decline has some policymakers worried, remarking that we're getting to the edge of where we might not have enough liquidity. Yeah, you need people to buy them treasuries, otherwise nobody buys, price goes down, and then yield skyrockets, which creates potentially undue tightening. Although, let's look at the Goldman Sachs Financial Conditions Index. Goldman Sachs Financial Conditions Index. Let's see how we're doing on that. Ooh, and then we got to look at NVIDIA's volatility today. Okay, financial conditions have tightened a little bit in February. I mean, not much. We're certainly nowhere near where we were in October. Whew, that was hellish. Ay. Kevin, drink coffee. See, the problem is I get in here and I just start yapping too much. And then when I yap so much, I don't have coffee. And so then it just sits here and gets colder. See, I found when you add milk, it's like the perfect temperature. It's so great. I always used to take it black. Wow. Now I add milk. So, okay, NVIDIA, historic volatility. Yeah, the historic volatility is going to be one thing. Implied is going to be another. Historic volatility is elevated on NVIDIA, but it's not as high as I thought it would be. I thought it would be much higher than that. It's just slightly above average. Okay, so what if I go to the implied overnight? This is important for options traders. Wow, it's gone down. Yesterday was 10.5%. 11.5%. It's gone down to 10.5%. Interesting. Wow. Okay. Yeah, the question here seems to be not, is NVIDIA going to beat? It's going to be, how much are they going to beat by? And how should I say, how are they going to guide? And what's that going to do to SMCI? SMCI. See, they're down another 4%. See, they're the short. There you go. Let's see here. Did I fix that? I think I did. Hold on. Oh yeah, okay, they're on commercial. Man, the amount of commercials on C, it should be just, it probably stands for commercial NBC. There's so many commercials. Every time I look, it's another commercial. I'm like, my goodness. I don't know, whatever. Okay, so let's see here. How about the losers and gainers pre-market? Okay, so Lunar is moving again. And then on the downside, you have Palo Alto, SolarEdge, CrowdStrike, Zscaler, ARM. ARM was down 5% yesterday, another 4% in the morning. Supermicro was only down 2% yesterday, down another 4.6% now. Palantir was down 4 yesterday, down about another 4 today. 3s and 3s on ENF. Affirm was only down a fraction yesterday, but look at that. Trade Desk was down 7% yesterday. It started at almost $89 and it's back at 80. Let's see here. Tesla yesterday was down 3%. It was down as much as 5% there in the hole, if you look at the spark lines here. And it recovered to only being down 3. Microsoft was down 0.31, big deal, and it's down 0.7 right now in pre-market. Okay, looking on this side, look at this company, by the way. We looked at this one yesterday in the course member live stream. And during the course member live stream, like right around here, it's like everybody just starts buying it. But anyway, the damn thing goes from like 30% to up 50% by the end of the day. It's right there, course member live stream. And now in pre-market, it's up another 21%. Keep in mind, this is a $1.1 billion company. When this thing goes down, it's going to go down fast. Now, they do have a potential lunar landing tomorrow. They don't really make money. They lose money. But they have a NASA contract, and they're paying out a lot to themselves in comp. They've got this whole, like, 3-tiered vesting schedule, like, get NASA contract, and, you know, share price to be over $15 for a certain period of time or whatever. And then there are basically these dilutive provisions that are just comp, right? And I don't believe the landing, and I could be mistaken on this, but I don't believe the landing is like their stock comp is contingent upon a successful landing. I think it's just contingent upon a landing. So I do think there's, first of all, I think there's still momentum in this, possibly today going into the lunar landing tomorrow. There's probably still momentum in it. But I would just say that when it falls, it will probably move down very, very quickly. So if I was playing this, I would have a sell set, like a sell stop set for this sucker. So, let's say you were into it at, I don't know, maybe you bought it yesterday during the course member live stream at $10, okay? I'd have some kind of what I'd probably do is I'd do a trailing sell on this to where it's like, when it drops, I don't know, 4%, 5%. There's some volatility aspect you have to consider as well. So, look, you can get 4% in one candlestick here and then get stopped out. So maybe you go 10%, right? It depends what your risk tolerance is. But then again, 4% in a candle is already a lot. So I don't know, maybe you go, I don't know, when it falls 6 to 8%, then you execute a sell. That would be an option. Some kind of trailing sell is probably what I would do for momentum. But I don't think I would want to invest in $1 billion company, which is a relatively small market cap, especially something that's memeing, right? Like, look at this. Especially something that basically went from a $200 million company to $1 billion company overnight. It's memeing, right? Something like that, I think, is very prone to collapsing very quickly, and so I wouldn't want to be in the diamond hand, it'll recover phase. I mean, who knows? Maybe they'll have a successful moon landing here, but I don't know. Anyway, Taiwan Semi apparently says it's planning on selling 850,000 shares of ARM Holdings for $102 million. Wow, that's pretty cool. So that'll be a little bit more selling pressure there on ARM before the SoftBank lockup. That's not a surprise. Barkin, the U.S. still has a ways to go to get to a soft landing. Barkin's your hawker. His name's not Hawker, that's somebody else, but he is the hawker. Ease of hiring is not back yet to normal, but conditions are improving. January data made things harder, but should not put too much weight on the month's information given seasonal issues. Correct. Totally agree with that. What? Okay. Recent data on PPI, CPI have been less good, showing dependence on disinflation on goods. Big picture of U.S. data on inflation on jobs has been remarkable. Yeah. All right. See what they have to say here as they end their little show, because they only got like 4 minutes left here. Oh, not that again. I'm telling you, it's these surges or whatever that happen out here. It's crazy. You get a little bit of rain in California and everything collapses. Whatever. Okay, so we talked lunar, and I think what's a reasonable plan here. Right. Okay. So next. Let's see. Look out. Chip stock earnings surprise have been decelerating. What? There we go. Stop it. No. Oh, there we go.
We're living with the
I fixed it.
that aberration from reality. And what we saw in the last inflation data was that goods prices are coming back up again. So we get a broadening out of inflation.
Where'd you see that? Get off the TV. Okay, it's probably not a good thing. I was let down by technology this morning as it took. What is this? Okay, somebody's just ranting. Okay, the market more broadly seems to have realized a few days ago that the best of all possible worlds and reactions have been discounted for this afternoon's Nvidia earnings and decided to sweep some money off the table. Well, yeah, that is highly rational. I was talking to somebody yesterday. I thought it was really cool. These people were so wonderful and nice. I was talking to somebody at the New York Stock Exchange yesterday, and as we end the Zoom call, I hate Zoom calls, but whatever. As we end the Zoom call, he's like, "By the way, man, saw your Nvidia weekend this weekend on the Nvidia correction coming. Loved the video, man." And he signs off, and I'm like, "Oh, small world." That's cool. I wonder if Nvidia's NASDAQ listed. Nvidia's NASDAQ listed. Okay. Looking at the chip sector more generally, the current earnings season has seen sales and EPS surprises decelerate somewhat from prior quarters. Mind you, the surprises are still strong from a somewhat broader historical perspective, blah, blah, blah. Drop in NVIDIA over the last couple, make the reaction function to earnings a little bit more symmetrical. Yeah, that's the thing. Like, this sort of like correction that you're getting pre-earnings for NVIDIA, I think takes some of the pain away from earnings, but who knows? You know, I mean, from a Fibby retracement point of view, you know, you got a little oopsie doopsies there. So apparently, employees sold millions of options yesterday, which depressed the price. Where'd you get that idea? Let's see here. California sucks, but I like to surf. I don't think California's that bad. Everyone's freaking out about the Fed minutes. Yeah, we'll cover those today. The minutes come out at 11. Rivian earnings today. Any thoughts on Matterport? Oof. Any idea when energy will move back up? Well, yeah, of course. When interest rates come down. That's it. Unfortunately, I think that's pretty. Like the question is, when the first cut happens. So this is the tough thing with energy. So mark the first rate cut at X. Okay. Well, X minus what is when energy stocks start going up and interest rate sensitive start going up. They'll probably start going up into the data, right? So like the pooper is what'll happen is people will sell energy, then we'll get close to rate cut, then they'll start going up, and then people will be like, oh, well, I'll just wait until it goes back down again, and then the rate cut happens, and then we set the stage for the next rate cut, but then we have to, you know, the interest rate sensitives will probably keep going up because they'll be cheap compared to everything else, and they'll now have a tailwind. Like, the greatest tailwind for let's just be blunt, Tesla and Enphase, the greatest tailwind is interest rates coming down. Once they start coming down, the stock should be, no guarantees, should be on a clear path up. Everybody wants to invest in a stock that's just clear path up. And they'll come up with all the theses in the world for it. Everybody wants that, right? The NVIDIA stair stepper, basically. And interest rates and bottom comps enable that. The question is, how soon before interest rate cuts does that actually start happening? Well, I mean, you could argue it already has on a company like Enphase because it was down here at 73 bucks. You know, but then again, it's also way down from where it was. So, you know, but then again, interest rates have been hiked during that period of time. During this yellow period of time, interest rates were being hiked. We break out of the yellow downtrend because interest rates have probably peaked. So look, wow, the stock's bottomed and it's actually come off bottom. Now, when rates start getting cut, the opposite, what was a headwind becomes a tailwind. And so the question is, how soon does that get priced in? A month before the first rate cut? Well, crap, then you have to wait until probably May for a June rate cut, right? Or does it get priced in 3 months before? Okay, well, you know, that's probably March. I don't know. Maybe it doesn't get priced in until the actual rate happens. Nobody knows. That's the toughie. So, yeah. All right. As far as Matterport, somebody asked about Matterport. Matterport. Oh, they already reported. Okay, let's see what happened to them. Matterport. Okay, that's not what I wanted. News. Okay, here we go. Oh, okay. They actually beat on. Well, is that a beat on forecast? 5. It's about right on the money in terms of forecast. Q1 revenue missed. The year guide was basically right on. And then the Q4 missed a tiny bit. Subscription revenue for Q1 beat. And subscription revenue for 2024 beat. So it was sort of like a slightly mixed report. It actually wasn't as bad as it could have been. Oh, okay, yeah, the stock's down 10%. Right, makes sense. the disproportionate reaction sometimes to earnings is very interesting. But remember, there's very little. Oh, interesting. And the CEO sold some shares in December. CEO Pittman sells 736,000. You know, I had an interview with him once. Thought that was pretty cool. They're really good. I think they just the problem with them is they never I think found a way to monetize the way they do these virtual spaces. I think that was the challenge. Monetizing that probably hurt them. So, yeah. Okay, good. So, next. Okay. What else? Let's see what they have here for us.
ChatGPT, tomorrow's trading on NVIDIA. But I would come back and say, remember, this is a company that is doing and thinking on a different plane than the rest of us. And I wish they would do what Walmart did when Doug McMillon said, listen, we got to split it 3-for-1 because people want to share. Then I think NVIDIA wouldn't be so nouveau riche.
That's interesting.
NVIDIA stands for nouveau riche data.
It's French for nouveau
Alpha.
riche.
Yes.
We're going to talk Walmart later on. There is one last thing that JP Morgan points out today, that if the guidance is too good, the street, strangely, will sniff out, well, maybe supply is getting better, and then the inventory correction comes. Is that possible?
Look, I think that to be smooth here is to be smooth on the Apple iPhone 4, Apple iPhone 5. I mean, he compares it to an iPhone moment, and that's both good and bad. iPhone moment, iPhone changed the world, but then we have people who say, look, the best is behind it already, and that's something we put on air all the time, when the stock was at like 7. So you have to understand that even though this is enterprise and not consumer, there's always going to be someone who says, look, this is the top, and it's all fanciful, and we're not going to buy the Eras tour from this guy.
Let's turn to Palo Alto Networks this morning, down on its latest earnings results as well. Jim, 3 downgrades today. Piper says, oops, I did it. They did it again, calling it their 3rd straight disappointment.
That's true. Now, I think Nikesh Arora is basically doing, and I'm going to quote this because I went through it with him, and he didn't seem to disagree with it. He's offering instead of doing a la carte sales, he is offering a price-fixed 21 category meal. In other words, he's bundling. Now, no one was ready for this, okay? And no one was ready for the federal contract shortfall in the next 2 quarters not be good.
Which they had staffed up for.
Which they had staffed. Right. We downgraded the stock for the Charitable Trust. And I shouldn't, I told him.
Federal contract downfall is probably going to hurt Palantir a bit too.
Saturday. We're upgrading today. Because everyone else is downgraded, we're upgrading. I want to run into the fire on this thing because I think Nikesh realizes that you can't nickel and dime all these different pieces anymore. You have to offer a suite. Now, he used a word which I think he wanted to take back very badly, which is he said there's fatigue. What he meant was that there are so many people, salespeople, in selling individual products that people are like exhausted and can't come up with the ROI. They're not fatigued in the sense that they're not going to buy any cybersecurity anymore because they'll all be inundated by, if you were to issue a statement today saying, listen, you know what, we're not buying any more of this, like Chinese hackers, Romanian hackers, Russian hackers, Venezuelan hackers, I would say even, maybe Pakistani hackers would be after these guys. You can't do that. You cannot possibly stop spending. So the idea that the fatigue was wrong. You're giving up the gain for this year. Now remember, this top 5 performer, S&P, top 5 performer last year, S&P. And Nikesh Arora is a visionary. And to be a visionary, I have to tell you, I want people to go to the conference call because it is brilliant. At one point, he says to Brad Zelnick, who hated the stock much lower, I will point out. First of all, he says, he's talking about platformization. That's what he's going toward. And he goes, only introduced 5 years ago when you didn't believe us, but now we got to worry about consolidation. And he does say that there is, to this one he says to Joseph Gallo from Jefferies. I love this. This is a short-term hiccup. I know you guys would love life that was linearly nice in quarters and moved up in a beat and raise percentage. I'm trying to get this done in the next 3 to 5 years, where we even become bigger and longer in platform and cybersecurity. And I say that, it's going to be down 100. I'll see that, and I'll raise it by the fact that Nikesh Arora is no longer a billionaire.
There was good sound with Nikesh and Jim last night on Mad Money. Take a listen.
There is no cybersecurity abyss. I think this is a reshaping of our demand curve so that we can grow faster in the longer term. We want to go ahead and platformize our customers. We want to be able to execute with them as they want right now so we can drive this business to a bigger number in the future years.
Interestingly, Jim, today.
All right, that's somewhat generic. Okay, so next, let's see. We have HSBC took another write down on China. Yeah, that's gonna be some tough reads to have China on your balance sheet right now. But it's so frustrating because it just feels like at some point it has to make sense to invest in China. You know, that's sort of like what's it called? The Michael Burry approach. You know, Michael Burry, he's very into Alibaba, for example, right now, and nobody else really is. And so, you know, then again, a lot of people, you know, have been betting on Baba for a year or more, suggesting the bottom is in. I don't know. It's been a tough ride. And you could have perfectly timed it at 57. But you're still sort of dragging along the bottom here. I mean, you're at 2017 prices for the stock. That's wild. 2017 prices. That's wild. Remarkable. So, oh well. So that's so China will be a really interesting one. Then you've got, let's see, Amazon. Yeah, Amazon replacing Walgreens in the Dow. I thought that was a neat little feat for Amazon there, just as Jeff Bezos is now at what, over $8 billion in sales, insider sales. I mean, good for him. I don't know what he must be raising money for something else, because, you know, what do you need $8 billion for? So it's got to be some kind of project or something he's working on. Otherwise, I mean, you're just gonna stick in the money markets, maybe. I guess you could do that. Boy, that's just wild. Okay, so that's econ. Let's look at. Yeah, okay. That's pretty benign right now. Let's look at the economic calendar. So economic calendar, obviously we got the FOMC minutes today. We've got NVIDIA today, which we'll cover. We have coming up a little bit of, outside of earnings, a little bit more of a quiet week. We do have PMIs coming out tomorrow. Manufacturing services composite. We'll get existing home sales. We'll get new home sales actually on the 26th. So then we're already into next week. So this week's very quiet with data. I mean, initial claims, boring. PMIs, moderately interesting, but mostly boring. And then of course you're at earnings. So that's pretty much all you got this week. A little bit more of a chill week, but that's okay. Some weeks come with a lot of entertainment. This week we have Wingstop reported this morning. I want to see quickly how they did. Let's see how them chicken prices are doing. Let's see. Wing price, domestic store comp growth, 21.2% growth versus 14. That's really good. Adjusted EPS 64 versus 57 cents. SG&A growing a little bit, but expects mid-single-digit growth this year. Okay, so forecast not as juicy as it has been. Wingstop down 2%. But boy, look at that stock movement. The sucker doubled. The chicken business doubled. Wingstop, just like, I don't know what happened here, but as of October, basically doubled. For Wingstop. You gotta be kidding me. Wingstop doubled. Let me see. Wingstop, let's see here. So if I look at the financials for Wingstop, let's see how the valuation is looking on this puppy. Okay, financials Wingstop. Okay, it's just like a little at a loss for words here. Okay, so we're looking at what? No, this can't be right. It's selling for $324, and they're expecting earnings of, this can't be right, $2.89? No way. Wingstop is selling for 112 times earnings? There's no way. They have 14% gross margin. What? This can't be right. There's something's weird about this. And then they're expecting maybe an average of 18% growth. So you're like a 4 or 5 peg here. That doesn't make sense. That doesn't make sense at all. Let me look at this. Investor relations, Wingstop. Financials, quarterlies. Q4, was that what they just reported? I think they put a date on. Oh, they did. Okay, yeah, here we go. Wingstop. View. I just want the data. Give me the numbers. Operating metrics. Where are your financials? Balance sheet. Here we go. Revenue. So, total revenue, advertising fees? Holy crap. Wait. Oh, it's like McDonald's. I get it. It's like a franchise. Company-owned restaurants made $26 million. Advertising fees. They make a ton of money off advertising fees. They're milking the crap out of their franchises. Oh my lord. They make $100 million in a quarter milking their franchises off of royalty revenue and franchise fees and advertising. And then $26 million themselves, of which 19.6 is cost of sales. Okay, well, advertising basically washed, but all the royalty revenue is like profit. Wow. Okay, very interesting. Net income comes down to 64 cents. Dude, no way. 64 cents in a quarter? That's $2.56 in a year. I calculated it at basically $2.89. This stock's trading for 112 times. You've got to be kidding me. With maybe 18% growth? Oh my gosh, the stupidity of some of these valuations. It doesn't make sense. And it's not like this is like really impressive. I mean, they're spending most of their money. What is that? Maybe they keep 20%? 20 something percent? And, I mean, let me see really quick. So what is that? 29 divided by 127. Yeah, 23%. Oh, God. Okay, and then their balance sheet, they've got 90 mil cash, call it 100 mil. I don't care about this other crap. So 100 mil in cash. Oh, well, their liabilities are actually decent. Well, 66. Okay, well, okay, so that puts me down at $34 million of cash. Oh my gosh, $34 million in cash? They have 20 times as much long-term debt as they have cash. This company's horrible. This is like a scam. How does this, with maybe 18% growth going forward, 20 times as much long-term debt as they have liquid free cash, and trading for 112 times earnings, have this stock price? And what's the innovation? Ripping off your franchises? You gotta be kidding me. Holy smokes. Are they just paying it out in stock comp or what? Let's look at their cash flow. I mean, maybe. Oh, they don't give the cash flow statement. Of course they don't. They just say strong cash flow generation. But then don't provide the financial because the financial isn't out yet. Because of course not. Yeah, of course it's not out yet. So they'll take their 3 or 4 days to release their actual cash flow statement when nobody's looking anymore. Sometimes finance just pisses me off because like you could look at these numbers and then you're like, oh, that's terrible. Oh, that's beautiful. Oh my gosh, that doesn't make sense. Whatever. Whatever. That's a scam. My God. Wingstop. What a rip. What a rip. Okay. Is it just like in the S&P 500 or something? S&P 500 stocks. Let's find out. Like, is this just indexation that's doing this? Okay, here's a list of 500. No, it's not even in the S&P 500. Please don't tell me it's in the NASDAQ. NASDAQ 100 stocks. No, it's not. So it's not indexation. Oh, that's just stupid. I don't get it. Don't get it. Okay. Wingstop is related to games. Oh, no. Intel event today. Maybe they have something interesting to say. Probably not. Kevin is a Wings hater. Hell yeah. I'll sign up for that. Oh, Bezos, Blue Origin. Yeah, that maybe. They're they're the AI server rack provider for Wings. Let's go. This just proves the market is over. Yes. Yeah, it's just ridiculous. That's an AI Wings. What is the short interest? Oh, that's a good question. Kevin doesn't get it. It's an AI play. That's a good one. Let's see if I can get it. Short interest. 4%. That's stupid. 5.3 of float. Short interest ratio is 4.15. Percent of float's 5%. That's crazy. Well, they don't short it because it's been going up. How fascinating. Oh well. All right. That's all the market is. It's like just short what's going down and go long what's going up. I think that's quite frankly the thesis of Wall Street. And it's really sad because, you know, when you're like a kid in college, you know, and you do these like discounted cash flows and you know, I hate DCFs, but I mean the principles are actually very good. Net present value, you actually like learn about value. What you learn in DCFs is great. I don't love using them for valuations because people are crazy with and ludicrous with the adjustments they make, and it's impossible to read somebody else's DCF and actually understand it. But beyond that, rant, it is so, you know, inspiring when you're in college and you learn all this stuff because it's like, oh yeah, there's a way to actually like fundamentally know if the stock's going to go up. And then when you realize it's like, no, it's when the stock goes up, companies raise their price targets. It's like Barclays, you know, oh, SMCI's at 900. We raise our price target to $939 with a 32 times a PE ratio 18 months out into the future, assuming growth will go on forever. And it's like, that's ludicrous. You're insane. You're just literally raising your price target because the price is going up. You know, it was like, and I like JP Morgan, but frankly, it was like a JP Morgan analyst, you know, going, when Nikola was at $40, we like Nikola because it's a good story. So we're raising our price target. I'm like, are you flapping kidding me? You know, and then when the stocks go down, what happens? You know, the fundamentals have changed. We have to lower our price target. This is so stupid. It's just all rigged. Validation. Trust me, bro. Exactly. It's so stupid. SMCI got a $1,300 price target. Oh my gosh, by somebody. That's crazy. Maybe Wings in the Russell. Yeah, maybe. It's just nuts. Corporate finance was a joke. It's nuts. What are my thoughts on the minutes? You know, I think the minutes are going to be very interesting. You know, what you really, you know they change the minutes, right? They change the minutes based on what the market is doing. So the market obviously reacted very heavily and negatively to the CPI print that we got. So keep this in mind. The Fed, I mean, Barkin, he's a hawk. He's like, January has a lot of seasonal adjustments. Yeah, that's true. It's a very difficult month to comp every single year. So the Fed has the ability, if they want, to actually pull forward rate expectation cuts or rate cut expectations. I don't know that they will do that, but they could. They could hint of looking past January. They could hint around targeting May. And that's what we're going to be looking for. Or they could push for July. We don't know. Especially after that hot January CPI, these minutes I think will be very important because they are going to massage the data in the way that they prefer so that they can get the market to align. Keep in mind, you have a 36.8% chance of a May cut, which is less than 50-50. We know that, but it's still well enough priced in that I don't think they want to shock the market on March when they rug pull and say no May rate cut. So today they might try to get rid of the May rate cut or keep the May rate cut in play. So that'll be the play here, is which way is the Fed going to try to massage markets? This is all a game. It's entertaining, that's for sure. It's almost like they want the market to be flat. Yeah, probably. I don't think it's very lucrative for, the stock market to do what it's been doing from the purpose of the Fed. In fact, I was just reading about this. I think it was in Barron's. Oh, it was very interesting. Stock market. Oh yeah, here we go. Barron's. The booming stock market is helping many retire early. Stupid crap logged me out again. But anyway, they had this whole, while I log in again, they had this whole piece about how, oh, okay, well, that was easier than I thought. Let's see here. Where was the number? Okay, here we go. There were 3.27 million excess retirees in December of 2022. And I think that number jumped this year. And basically, they're blaming the stock market for more people retiring. I can't find where the number is right now, skimming this. But whatever. They were blaming how well just indices have performed and people's 401ks have performed, essentially just enabling more people to retire. I don't know if I could ever retire. People are always like, come on, why do you wake up, at whatever, 4:45, 5-ish, somewhere out there every morning just to go live? And it's like, well, it's kind of fun. And it gets the day started. Otherwise, you sleep in till I guess you're East Coast, it might be a different time zone, be a different skew. But if you're West Coast, you don't wake up for the market open. You're sleeping in until 8. If you work from home, you sleep in until 7:59, and then it's like, oh my gosh, then you're beholden to everyone else. Because you could have control of your day waking up a little earlier. That's my take. Okay, all right, enough of this crap. So, what else? We got 3 minutes to go since the bell. Second lien loans may indicate a credit bubble. Do you spot a credit bubble? The amount of second lien loans being taken out by companies can be a decent indicator. These loans are generally considered riskier for investors. Well, duh, because, you have second priority. Company goes bankrupt. The second lien that doesn't have priority over the first. What is this? There are a few guys on CNBC yesterday thinking the Fed might raise rates again. I think they'll probably put the kibosh on that. I don't expect that one. So, anyway, okay. We're 90 seconds away from the opening bell. Did anybody have questions on the house hack video yesterday? If you did, you're welcome to ask. But that was, I think, if you haven't seen it yet, I made a full house hack update video on sort of the path to IPO. There are actually 2 IPO moments in there, which is really cool. So if you want to see that, take a peek on the House Hack Homes YouTube channel. Okay, so what is House Hack? It's my real estate startup. There should be a link in the description to the House Hack YouTube channel, and you could see it. We might start fundraising with the warrant expiration again Friday. But anyway, go check it out, and it'll explain that. That's what that is. Behind me. Okay, so we're getting up on the bell here. So we've got about 40 seconds to go on the bell, and yeah. Okay, so taking a look at just any last-minute thing here. I don't have anything here. Nothing on the lives. Okay, nothing from the soothes. All right, let's listen in to the bell.
Keep in mind, Vertiv, #1 performer if it had been the S&P, and somehow let people down, even though it was an amazing quarter.
Right.
So just expectations. And the long knives are out for the Nouveau Riche NVIDIA because no one can believe it could go from 150 billion to 1.7 trillion in 4 years. No one believes it, but it did.
Not to mention adding whole Intels by the week in recent weeks.
Well, I mean, Jensen Huang, okay, so he wears a leather jacket, and he's kind of cool guy. The problem with those who think he's just kind of a cool guy is they're missing the point. He is the Da Vinci of our era. He has thought long and hard about what's going to appear in 20...
There it is. Okay, let's take a look at how things are going here. So, let's see here. Okay, Q's got the red candlesticks right at the open here. Okay, nice. Wingstop drops 6%. Man, I want to short that sucker. It's just tough when things have trended up so much to short up, even when the fundamentals are just stupid. So yeah, big fat red candlestick there at the open, and I can't say it's really driven by Nvidia here. Supermicro drops another 6% here. There's some fat red candlesticks coming out here. Oh wow, Tesla. Okay, I'm not gonna look at that one. I'm gonna press this, and then I'm gonna look away. Quickly look away. Don't look over there. Okay, Intel, 65 bips down, trade desk. Okay, a lot of miscellaneous junk over here. Toast is still toast at 21 bucks. Coinbase drops 165. Again, it trades as a Bitcoin proxy. We know this at this point. It just moves down with Bitcoin or up with Bitcoin. That's fine. We've got Taiwan Semi's even come off of its highs. It was up at like 131 there. Yeah, look at that. That was around 212. We sort of capped out at about 135 on Taiwan Semi. Rotated down a bit here. We've got Amazon. Amazon's moving up. Look at that. It doesn't matter that Jeff Bezos is selling, which is the opposite of what happened with Tesla. Jeff Bezos sells and the stock goes up. You've got 141. Probably some enthusiasm around the Dow acceptance. You've got Palantir trying to green candlestick, although it's down 3 and a bit. Affirm rotating back down to about 36 right now. Costco's positive, 725. Bud, I don't even know why they're on this list. Somebody asked me if I wanted a Bud Light yesterday. I had to say no. Dave & Buster's, that's not moving much. Okay, let's look at the movers. Google, slightly positive. Where are the movers? So, oh, wow, Palo Alto really dropping off the cliff over here. You're at negative 26% now. You started about negative, 19% or so. So you've really gotten hit even more over here on Palo Alto. You've got SolarEdge getting hit pretty hard at 14.7%. At the beginning of the stream, we did a little bit of analysis on them, and what we found is the company is gross negative. So they're losing money on a gross basis. Very bad, because you're losing money on gross basis, losing money across the board, and then you wonder, are they going to go bankrupt? It wasn't very good. So and we kind of thought that what if there's a chance, Enphase and Tesla are pulling this move where it's like bankrupt all your competition, and then then you have no competition during the good times. That's an idea. Who knows? So ARM, we know that Taiwan Semi is selling about $100 million of this. And then we've got, let's see here. Yeah, yesterday in the course live, by the way, we did Simpson Manufacturing, ticker SSD, and Lunar. I always like to kind of document what we did. There we go. Okay, so Matterport dropping on their earnings. They had a slight miss on guide. Their earnings were not actually that bad. So I wonder if it's just something they said rather than the actual financials of the report. Because again, those financials didn't seem that bad. Solar Edge seems... See, Enphase isn't getting hit like Solar Edge is. Enphase down 288, Solar Edge down 14. Not to say Enphase is doing great by any means, but it does show a market implied differentiation between the two. Super Micros, it's getting a little stuck there at -6.5. See these candlesticks. This might actually start turning green here in a moment from where it is, not overall. Coinbase 5. Fair Isaac. Okay, how many days in a row has this been red now? Oh, okay, not many. This is one that I've been looking at, considering investing in. And I don't know. The problem is it's been so euphoric. I have trouble opening positions on stuff like this. I'd rather just go to cash. Wow, look at Nvidia. Nvidia, with the sell-off yesterday, is actually trying to go green right now. Oops. Yeah, it's not highly unsurprising that people come in Monday, set up their shorts, who are going to. Wingstop's trying to go green, show us some green candlesticks as well. Okay, how about to the upside? Lunar, we talked about this one. A lot of share lockups on this one. So I like to be cautious on this one. And it is definitely a momentum stock, so I recommend trailing stop losses. You know, hashtag not personal financial advice. Anyway, Toll Brothers, they had good earnings. I mean, it's remarkable, but they're still selling homes a lot. And Toll Brothers is like your luxury home builder. So you consider, when you look at Toll Brothers, you look at them as, you know, not sort of a rental income kind of play. You look at them as a growth play of speculation on people with more money spending more money. And that's why you've got Toll Brothers here doing quite well. 5% for a home builder. That's fantastic. And they've done great over the past year. So very good. Certainly better than expectations for this market. CrowdStrike, you know, Cloudflare was not catching up to the pain that CrowdStrike was having today. Yeah, Cloudflare is only down 2.7, 2.8-ish. So watching NVIDIA sitting at 1% is also interesting. Looking at, okay, yeah, second lien credit bubble. We never finished that thought, so let's see here. Why aren't more companies reaching for second liens in a market where risk premiums are at an all-time low? The amount of second liens has dwindled to practically nothing. In fact, last week saw the first second lien to price in the market since July of 2022. Wow, that was like the S&P bottom, I think. Because certain tech stocks didn't bottom until the end of 22, but I'm pretty sure the S&P bottomed in July of 22, which is right when we actually created Housei. Let me look at that really quick. SPY, and then I go to the week chart. Oh, it was September. September, October was the S&P bottom. July was a near bottom. How interesting. But that's fascinating. So you're actually not seeing second liens. Yeah, wow. I think it's more. I think the jobless recession isn't really playing out. The consumer recession isn't playing out right now. You have a rolling recession of various different, what's it called? Industries going through corrections, cyclical, many of them cyclical in nature, but not this broader recession. I do think there's a consumer credit bubble, like the buy now pay later stuff is scary, but some people say they can manage it, and they're like, oh no, I use it, I can manage it. I'm like, oh, okay. Federal Reserve Bank Richard Barkin. Okay, we talked about that a little earlier. You do worry about when the goods price deflation cycle ends. You're going to be left with shelter and services higher than you like it. Yeah, that is potentially true. And shelter's taking a lot longer to rotate down on the Fed means. One of the things, too, is, you know, sometimes when rent values fall, which even the Bureau of Labor Statistics indicated that rent prices fell about 4.6% year over year. The problem is just because rent prices go down doesn't mean your landlord reduces your rent. They just might not increase your rent. And then even though rent prices might go down, it's not that easy for a tenant to just pick up their crap and go, screw you, I can get a 4% discount by moving. Well, okay, so say you pay $24,000 a year for rent. 4% is $1,000. You can't move for $1,000. You'll burn at least that trying to move. I mean, obviously predicated on how much you have and how far you're moving. But I mean, you're certainly going to burn 3 days of your labor. And I mean, your labor at $20, you know, times 8 hours times 3, that's $500 already. That's only your labor, assuming you can move yourself in 3 days. You know, at $20, which is a very low number, right? Should value your time more. But, yeah, so then you don't get people who actually realize lower prices. And so it takes even longer for shelter inflation to actually come down on the owner's equivalent rent survey. Because even though new market rents are lower, owners aren't realizing those lower rents until they actually have a turnover. But, you know, like, for example, in a house, the average time that people rent a house is like 4 or 5 years. The turnover is very low on houses, a little more so on multifamily. That makes multifamily a little bit more management intensive. Anyway. Am I going to be live for the Fed minutes? Yes. Chickens jumping out of Palantir, crying emoji. Well, let's see here. There's some valuation question, right? Tesla down 1% over the last year. Stellantis up 52%. So then the question is, which one do you buy today? Yeah, probably on the space projects for Bezos selling. I did pick up that SMCI option on Friday, and I made a 3.7x on the way to the airport. I am, like, obviously it's gambler's mentality. I wish I held the option, but I was driving to the airport. I'm driving to the airport, and I have, like, my car's on FSD, and my phone's, like, right here on the little window magnet or whatever. And I'm just seeing it go down, and I'm like, this is freaking crazy. And I'm like, well, I'm about to take off, and if I take off, I'm gonna lose service. So I'm like, screw it, close. That was great though. That was really, really entertaining. I bought Uber in the 20s, proving right. You know, yeah, I have to say, the Uber, we talked about this the other day. The FSD risk is way further out, you know, for robo-taxis hurting these companies than expected. And you're getting a lot more drivers, which is more profit for Uber. What are your thoughts on the SEC trying to change the accredited investor requirement to a test program? I don't know what that means to a test program, but I do think they're trying to raise the definition of accredited investor. I actually think it's unfortunate. I mean, in a free market, everybody should be able to invest in everything, right? Like, you should not have to be, for example, an accredited investor to invest in the Friday fundraise for House Hack, right? You shouldn't have to be an accredited investor, in my opinion. You know, 18% of people are accredited investors. Maybe of the people watching this video, like 30 or 40% of people are accredited investors. Fine. But, you know, those numbers might have with their new program. And personally, I think it's anti-capitalistic, but, you know, they have their reasons. And I ain't the boss of them. So tell me what the rules are, and then we'll follow them. FSD 12 seems to be promising. I refuse to do any updates on my Tesla. Let's see. Yeah, we actually had to get a tire replaced, and we had to beg them, please do not update the vehicle. So hobo taxi. Oh my gosh, there's some interesting words here. Rivian Rising. Why did you do the Harry Dent interview on your plane? That was a logistics issue. He didn't have the time in his schedule to meet where we were set up with the studio, so we're like, okay, we're gonna be here, which is closer to you, but that's because we have to take off and go interview Patrick Bet-David, so we could squeeze you in on the tarmac. So that's what happened. Somebody says, why would I not want to update my Tesla? Well, here's somebody else. Don't do the update. So, but it's the latest update, because of the recall is so bad in terms of nags. People are pretty pissed at how annoying the darn thing is. Now that it always pendulums, right? So like they get really, really annoying, and then they get less annoying. Like they have to find that balance. So I don't think it's a long-term issue. It's just right now it's placating the NHTSA, and what is that? The NTHSB. I don't know. There's an S in there. National Highway Transportation Safety Board. NTHSB. There we go. Whatever. Let's see. In all interviews, people are always so bearish. Does that ever impact your thesis? I mean, of course, there are things that people say that I think are very interesting that I haven't thought of before. So I personally love doing the interview, but I have pretty resilient opinions. But I mean, if there's a really good argument, I'm certainly down to make adjustments. This, by the way, NVIDIA here, taking a peek here, it just gave up again on some of its run right there. And then we've got BABA actually up 4% today. Look at that. Some enthusiasm on BABA. SPY, all over the place. Remember the minutes? We'll go live for the minutes at 11. You know what I'll do is, let me make it right now, and we'll just call it Fed minutes. And so, FOMC left. So what'll happen is you'll get a little pop-up when I end this here. So maybe don't close the window yet, unless you don't want, you can do whatever you want. But what I'll do is, as I end this, you'll get a little redirect link, and then you can hit the little reminder button, and then it's actually pretty easy for you to get to that way. So that's a consideration. So anyway, but yeah, Q's right here dropping a bit as we progress. It looked like we were going to be stable there for a moment, but that stability vanished pretty darn quickly. Darn thing. Okay, let's do this. There we go. And redirect. Boom. FOMC live. Cool. Okay, the redirect's up. So that means once we end it in a couple minutes or whatever, we'll get a redirect pop up. Okay, good. So Wingstop, I mean, you saw how pissed I got at that. And then we've got, I'm just not gonna read that particular one out loud right there. Toll Brothers 5.5. We've got Intel. What is that? Bobbing around -1. Trade Desk 183. Bitcoin 51K. How is that Lunar doing this morning? Let's see. Oh, look at that. It's selling off a little. So that was up like 12%. I think there is some risk here with that lunar landing tomorrow. If it doesn't go well, the thing halves in value really, really quickly. Edge still at 14%, 3 on Enphase. Nothing here's really changed. Palo Alto does keep getting worse. 26%. It was about 25. So, okay. All right. Time for the redirect link.
Go yourself.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Ooh. Toast plummeting. Let me take a quick look to see what the news on Toast is. I gotta make another cup of coffee. Toast says, and then you're gonna get the redirect link. Toast says, oh, there's literally no news on Toast. We just know that they cut, and this was from like 6 days ago, they cut 550 workers. Crazy. Okay, anyway, so, yeah, you'll get the redirect link now. See you soon, bye.